The number of startups in India continues to swell with each passing day, and so do the number of unicorns. Till May this year, India had 100 unicorns with a total valuation of $332.7 billion. On Sunday, Prime Minister Narendra Modi said the Indian startup unicorns' average annual growth rate was higher than that in the United States, the United Kingdom, and other countries. Modi said that the startups continue to create value despite the pandemic-led slowdown. Meanwhile, on Thursday, Union Minister Jitendra Singh said startups will determine India's economy and that of the world too. Last week, logistics player Delivery became the 12th startup to list on the bourses since 2019. Even as foreign investors are tightening their purse strings and asking the startups to brace up for tough days ahead, a Business Standard analysis found that their key management made a killing as they took the startups towards IPO filings. Of the 12 startups analyzed by Business Standard, employee benefits, which includes salaries, bonuses, wages, and gratuity, increased 21.4% in the year of the filing of the red herring prospectus. The year before, the average increase in employee benefits was just 8.8%. However, the key management personnel and their relatives earned considerably more. The average remuneration for KMPs jumped 114.9% in the year of RHP filing, up from 70.3% a year earlier. The remuneration in this case does not include data on rents and other benefits accrued to the top management during this period. However, it does include short-term and long-term benefits and ESOP expenses. A look at the larger sample of 93 companies which filed their red herring prospectus for IPOs in the last year and a half also shows stark differences in the compensation. The average employee salary was up 10.9% across the board, while average key managerial personnel remuneration was 39.2% higher in the year of RHP filing. The gap in startups is thus higher than other companies. One reason for this is that startups tend to hire more personnel as they move closer to the IPO. And there's more of a need in these companies to align themselves with market-linked salaries and retain top talent. An earlier analysis of a sample of 76 companies from the Nifty 100 index by Business Standard had indicated that the gap between the compensation of top executives and the median employee was 184 times. Among sectors, the gap between CEO salary and median employee salary is distinct among pharmaceutical companies at 340 times in FY21, followed by automotive at 308 times and telecommunications at over 257 times. In contrast, banks have the least inequality with the median CEO compensation at 91 times the median employee salary. Other sectors with low CEO to median employee salary include insurance and cement at 105 times and the industrial at 150 times in FY21. There has been a similar increase in income gap between the top management and regular corporate employees in other countries as well. The average US CEO salary was 351 times the typical worker's salary in 2020, according to an August 2021 report from US-based think tank Economic Policy Institute. And it was closer to 307 times in 2019, according to authors Lawrence Michel and Jory Kandra in their report titled CEO Pay Has Skyrocketed 1,322% since 1978.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.